All right, thank you for joining me right here. Thank you everyone. So let's get to our price chart. I believe you can all see my screen right now. Okay, so let's get to our chart. Over the duration of our trading journey so far in the year 2024, we have done a lot. We have experienced a lot. We experienced a lot of profit, losses. But remember, just as what I always emphasize on is losses are inevitable in trading. We can't escape that. And just like what I told some of my students, I told them that you have to see losses as the cost of running the business of trading, right? If anyone ever told you, oh, you won't have a loss, or my strategy, their strategy, whatever is 100%, 99%, 99%, 90% is almost approximation to 100%, right? Now, real trading is all about how you manage your risk. It's not all about the strategy. It's about how you manage your risk. When you are wrong, how much are you losing when you are wrong? And when you get it right, how much are you getting right? Right? That is what real trading is all about. Right? Now, in this class today, I want to discuss about a general topic that is applicable to all traders. Right? This is a general concept which is applicable to all types of traders in the financial market. And this boils down to how we use our time frame, because I discovered a lot of traders still have the difficulty on how to use their time frame in technical analysis of trading, right? So I shot a video on this concept on my TikTok profile and I sent it out to my social media profile. Probably you have. Please mute your mic if you're in the class. If you're in the class, mute your mic, right? I do not want to hear any unwanted sounds in the class. Mute your mic in this class, right? Now, as I was saying, time frames, we are going to dive into time frame, how we use time frame. But before we dive into time frame, we first have to discuss about one of the basic concepts of trading, or one of the basic concepts of technical analysis, which boils down to trends in trading the financial market. So right here I have my whiteboard with me, and I'm gonna enable my whiteboard right here. And first we are going to talk about trends in the technical analysis of trading. Trends. So we have trends in technical analysis. So this is what we are going to focus on today. And whenever we talk about trends, majority or the mindset of majority of trader in the market is, oh, I know about trends, so trend is what I know about. Unfortunately, majority of trader only know the basics of trends. First, what is a trend? What is a trend? What is the definition of a trend? Now, all right, thank you. All right, so what is the definition of a trend? What is a trend all about in trading? What is a trend? So when I say trend in its simplest definition, trend is the path through which price moves to achieve its objective goals. Now, what are these objective goals? These objective goals is related to price direction based on periods. Now, I made mention of direction and period. Now, when I said trend, when we talk about trend, we have to make references to two key factors. In fact, we have like four, right? First, when we talk about trend, we are referring to price movement. Right? Price movement. Now price movement is what we call price action. Now price movement at a specific direction. Specific direction. We made mention of direction, right? Direction over a period of time. Over a period of time. Period of time, right? Get that right. Period of time. So when we say period, we refer to time, right? Now trend in its simplest definition is the price movement in a specific direction over a period of time. Now the four key factors we need to understand right here is price, which is number one. Movement. Price is always in a flux. When I say flux, I mean price is always bouncing up or down. Price is always going somewhere. Now where price is going is our direction, and for an object to move at a direction, it has to move over a time period, and this is what we have right here. Now for us as a trader to effectively trade trend, or to understand the concept of trend, we need to understand the four factors which build up trend, which are price, movement, direction, and period, right? Now we've discussed prices in our technical analysis in the foundation, the beginning of our charting candlesticks, right? When we talk about price, these are the activities of those who buy and sell in the market. So these are our candlestick patterns. We talk about our line chart. We talk about our Western bar chart. We talk about the hiking action chart. We talk about the different chart. No, candlesticks. These are price, right? CANDLESTICK, candlestick patterns. And when we talk about movement, this is the action, right? Action. The action right here is the movement. This is based on action. You can see that this is the action, right? So price movement, another way we can refer to price movement is price action, or we say candlestick movement, but the professional way to refer to this is price action, right? Now we talk about direction. Now when we talk about direction, for an action to occur based on price, it must do two things. It's either it moves up or it moves down. That is the actions on prices. That is what candlestick does. Now there are some times whereby there will be a force of balance between those who are going up and those who are coming down. Then we have what we call the what? Sideways market, or ranging market, or doji candlestick. So in an uptrend market, we have what we call the bullish candlestick. This is an indication price is going up, right? Bullish. And in the downtrend, we have what we call the bearish candlestick. And in a sideways market, we have what we call range or doji, right? Now for those of you who started your foundation, the beginning of your classes, you'll know what bullish candlestick are all about. It indicates price going upward direction. You know that? I do have this candlestick with blue colors on my price charts. For those of you who have been following me, you know I do have this on my blue candlestick in blue color. It shows me people are buying. That is the movement. Action, right? Now the bullish right here, this is the price, the movement. It's going up. This is the direction. Uptrend. That is the direction of this bar. Direction, right? And we can have what we call the what? We can have what we call the bearish candlestick. We have it such this way. We have a bearish candlestick. We have it in red. I do have it in red on my candlestick chart. We have a candlestick this way, and it shows us people are selling to the downside. So this is a downtrend. Now the direction of this flow is to the downside, right? To the downside, right? So the direction is to the downside, and the bullish candlestick, it is to the upside, right? Now most of traders They only understand the basics of trend in technical analysis. They only understand the basics of what? Trend in technical analysis of trading. Now, when I say basics, some of the basics you guys know is uptrend market. In an uptrend market, market gives you higher high, higher low, higher high, higher low, higher high, higher low, higher high. And the basic theory given to you or dished out to you at the foundation of trading is, oh, you look out to buy at higher low swings, you look out to buy at higher low swings, and you look out to buy at higher low swings. But most of the time, when you take your trade at higher low swings, higher low swings, higher low swings, the market do what? Goes against you, and you have a losing trade. Bam, 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 right? And in a downtrend, you are being taught, you look out for what? You look out for sell to the downside, because the market is showing you, oh, people are selling to the downside in this market. And based on the theoretical aspect of downtrend, you have a low high swings, which makes you start looking out to sell from the top of the low high swings. You do this, and then you still have a losing trade. Now, why? Now, okay, you brace yourself up and you said, okay, this time around I'm gonna do what? Buy and sell in a range bound market. And then you want to buy right here, the market goes down and wick you out. Instead of that, the market goes up, you want to buy again, the market wicks you down, right? Now, why is this so? The reason why you do have all this losing trade is based on the fact that you are operating on the basics concept of trend. Now, what you need to understand as a trader is the market will never do the obvious thing. When I say obvious, the market will never do the simple thing for everyone to take advantage of it. Just view yourself as an individual. Would you want people to take advantage of you? No. The same way goes to the market. The market will never want majority of the market participants to take advantage of it. Rather, only the minority who have the eagle eyes, the in-depth understanding, should be able to take advantage. Right? Now, this means if you are still operating on the basics of trend, I'm sorry, you might be disappointed. Right? You might be disappointed in these basics of movements. If it was so simple this way, if it was so simple the way printed, the way we printed, the way we draw it on our chart, then everyone should have just make a photocopy of these images or this image right here and start replicating it and start printing money easily in the market. But there is something we call re-engineering in the market. Re-engineering. So for those of you guys who are just hearing this for the first time, this is an advanced section of trading, right? This is an advanced section of trading, and those who opted in for our full tutorial, they are actually going to go through all these concepts right here. Market re-engineering, right? So there are some group of traders in the market. What they do is they try to push the market against the basics of what you know. They understand all your concept of buying higher high lows, selling low highs, ranges concept. They know all this, every theory, practical, everything you've learned about in your beginnings or beginner stage of trading. They know all these things right there. Now, what they do is to re-engineer you. Now, how can you put yourself on the safer side? The reality about this stuff right here is, for you to be good as this trader or for you to be balanced with this trader, the chances is low. But I'm not right here to scare you off or to frighten you, but I just want to tell you the truth about this trading, right? We have some group of traders right here. We call them the smart money, we call them the institutional traders, we call them the market mover, the whale, the shark. What this means is guys who have that big money, millions of dollars, billions of dollars, who move the market. Your $10, $100, $1,000, $100,000, $1 million cannot move the market. It can't move the market. What we do as a retail trader is to ride on the wave of this market mover. Now, there's something I want you guys to know in this class today, and I want you guys to put this down on your notepad or your your jotter, right? So I do advise trader, whenever you're coming to my class, you need to have a written material, because my classes are always filled up with great information which you never want to miss. Right now, first thing you got to understand is number one, we have late and early. Late and early. Right now, we are going to put this right here. Good. Now, when it comes to trading, you need to understand that as a trader, you must not get in late. Don't get in late. You need to understand that. Don't get in late. Don't get in late. Don't get out late. Don't get in too early. Right? So you need to understand that. And don't get out too early. Now, what does this mean as a trader? What does this mean as a trader? Now, for you to be able to operate these four concepts right here, you need to have an in-depth understanding of trends. Based on what I stated in the beginning, most of you only learn the half of trend. Don't worry, we are still going to dive in. What is a long concept? I don't think this 1 hour class can actually capture everything in this class, but I think at the end of this class you should be able to get 1 or 2 things. Right now, this is part of the advanced section class. I just want to dish this out as a Christmas New Year gift for you traders. Now, when I say don't get in late, this is based on, number one, I told you there are market movers, the big guys, the wheels and the sharks. Right now, these guys move a lot of big volume in the market. Now, you don't have to get in late when these guys have moved. It's just like when a train is about to start. Once the train starts and you are late to the train station, it is gone. You are gone. That's all. And then when you get to your bus, your train station, or your train stop, or your train stations, train stop, whatever, where your destination, and then you get out late, the train will move, and then what? The train takes you to another destination. So don't get out late. So this is about timing. Right now, when it comes to early, this is about patience. Don't get in too early. Most of the time there isn't yet confirmation. You get in too early, you get your fingers burnt. Don't get out too early. This focus on the aspect of riding the trend and maximizing your profit. This is about trailing your profit. Let your winner run and be more wide wins. Most of you, when you make small amount of money, you get out early, and when you get out early, you discover the market now moves in a direction so long you could have made a lot of profit because you get out early. So you don't have to get in late, you don't have to get out late, you don't have to get in too early, and you don't have to get out too early. Now, how can you effectively utilize all these 4 factors right there? This still boils down to understanding trends. Now, lateness and being early is all about time. If an appointment is being fixed and a time is given to you, you don't have to be late right here. If you are early right there, it's nice. But in trading, you don't have to be late and you don't have to be too early. So you need to understand that. Now, how can you understand this time factor? And let's get back to trend analysis. Now, when it comes to trend analysis, there are 2 sides to trend analysis of trading. Trend analysis of trading, there are 2 sides. trend analysis. Analysis of trading. Majority of trader, they only learn the half of trend analysis, and I will show you. The half right here is what is uptrend market. You learn higher highs and higher low, and you learn downtrend, right? And then you learn range trend or sideways trend, right? This is what you learn. And then, okay, you add the choppy market. Some don't even know what is choppy market. Now, after you learn all this, you think that is all to trend. That is not all. If you try to trade with these 4 factors right here, I'm very sorry to tell you, dear trader, you're gonna blow everything in your accounts. You blow all your money, right? You waste everything totally, and you come to the conclusion that trading doesn't work. All these are fabricated theories or practicals. They actually work, but we are here to complete your syllabus on trend. Now, listen attentively. Now let's get to the second part of trend analysis. The first part right here, it's about direction. Now I am going to clean this right here. Now what you have learned right here is about direction, directional move. This is direction. You only learned direction of trend, and then you ignored duration of trend. You can see that. Now under the duration of trend, the duration of trend, it's like the godfather of direction. Time is very, very important, and that was why I made references to what? Being late and being early in the market. Don't get in late, don't get out late, don't get in too early, don't get out too early. Now, not being late, not being too early is based on duration, and duration is based on period, and that is what we call as time cycles, and trading is all about timing. You can turn a good trade into a bad trade if you don't not understand the concept of proper timing. Yeah, and you can be at the wrong side of the market if you do not understand the period, the cycles. Now let's dive into duration, trend duration. Now when we talk about trend duration, we're talking about time, period, cycles, right? Now based on the trend right here, we have what we call number 1, which is the majors. We have majors. We have what we call the major trend. We have the another name to call it. I think that should be synonyms, another English, right? Now we have the long term. You can also call it long term trend, right? You can call that long term. And we have the second, which is what we call the intermediate. When something is intermediate, in between. Now what is in between? Intermediate. Am I right? Intermediate. Now there's something I want you guys to take note right here under this intermediate. The synonyms right here is what we call speculative trend. Speculative, and I will tell you why it is speculative. Speculative right here. Now based on the teaching, take note of this. Based on the teaching of the grandfather of technical analysis, Robert Skubaker. These are the pioneers of technical analysis. This guy wrote a book tagged the Bible of technical analysis. As a Christian, our holy book is the Bible. As a Muslim, our holy book is the Quran. And the traditional worshippers also have their holy worshipping, or their own how can I put it, their own mode of it is books. Yes, they have it. I know they have it. The Yoruba, they have this is it or this Okmoifa or whatever, things like that. Yes. Now in trading as well, we have our Bible. Unfortunately, most of you guys do not read. You don't read. Leaders are readers. If you want to lead, you have to read wide in your field. Now based on the teachings of the grandfather of technical analysis, Robert Skubaker, these are the pioneers of trading. These are the guys who have been trading right from the early stage of trading. It stated that immediate trend can also be called speculative trend, because this is the easiest and the most reliable trends to make money. Now let's dive into the third one, which is called the minor. When we talk something is minor, when something is minor, what does it mean? It means it's not as important, it's not as strong or as effective or as powerful. Now, minor, we say another name for that is short-term trend. Now, I'm gonna break things into smaller particles so that you guys can understand this right here. Right now, when we say something is major or long time, it means a trend which has a long, a kind of a wide longevity. I mean, when something is very long, a wide period of movement, and based on the teachings of the grandfather Robert Skubaker, may so rest in perfect peace. Is one of my plans. I have that plan to visit is it gravestone. Whenever next I visit the United States, I just want to go right there to pay respect, right? So this guy really did a lot of work in technical analysis. Even Edward and Maggie made references to some of his work. Right now, based on major long-term trend, this guy told us that major or long-term trend, these are trends that elapse more than what? More than 12-month calendar period. I'm gonna break things down to down to pieces. You guys are gonna see that. More than 12-month calendar period. Now, intermediate trends, these are trends within 12-month calendar period. Less than 12 months, less than 12 months, right? My screen is filled up, so that is 12 months, right? That is 12 months. Just understand that. I think I have to reduce the size so that we can see that. Oh, that will be too small. Okay, that is 12 months. So intermediate or speculative trends are trends less than 12-month calendar period. So these are trends that elapse between 1 day but not more than a year. But major trends are trends more than a year cycle. Now, for those of you who have gone through economics, finance, business, there's something we call business cycles, right? This is the cyclic movement, right? I don't want to get deep into that. So when we say cycles, this is based on seasons, right? Now, let's just move down a little bit. Now we have this minor. When we talk about minor right here, we are referring to trend within 1 day and 3 months. Now this is where the business calendar was being originated. Most of us who have been in the investment world, or maybe you have done some fixed deposits, cash deposits, or you have been in any investment, or you've been investing in the stock market, you're going to be hearing the word first quarter, second quarter, third quarter, fourth quarter. So that is 3 months. So whenever you hear first quarter, second quarter, third, fourth, it's talking about 3 month calendar period. So we have 3 months. Now the minor trends are 3 months, from 1 day to 3 months. Now that is a minor trend. Now the question now is, if our major or long-term trend are trend that elapse more than 12 months, which are trend more than 1 year, and our intermediate and speculative is a trend within 12-month calendar period, and our minor or short-term trend are trend within 3 months. Now, under which category can we put 1 hour charts, 15-minute charts, 4-hour charts, 5-minute charts? Now, based on the teachings of our grandfather Robert Skubaker, there wasn't any references made to 5 minutes, 15 minutes, 30 minutes, 4-hour, 8-hour chart. The least time frame references were being made is the day chart. So which means during the days of our grandfathers, the lowest time frame is the day chart. Now the question is, why do we trader of nowadays, of this generation, Gen Zs, 19s, 18s, why do we now trade 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour? Can someone tell me what brought the arrival of 5, 15, 1 hour, 4 hour time frame? I want answers in the comment section. I'm going to put a post right here so that I can ask you guys. I can know if you guys are actually following this class, so it doesn't be like, oh, this just like right? I really want to know if you guys are following me. So I have a question for each one of us in the class. Can you students in the class let me know what brought about 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour? What brought about those time frame? Can someone tell me what brought about those time frames? Does any of the attendees? All right, go on.
So, in my opinion, you said this generation, the Gen Z generation, I think they are not patient enough.
Right, right, all right, all right, all right,
Or there's an update.
all right.
During the days of our old fathers, that was there, and now there is updates of many things. So that's all.
That was perfectly said, right answer. Yes, mommy was right. During our grandfathers, our first traders, pioneers, during that time, as a trader, there is nothing like the internet like this, like it's nothing like computers, laptops, smartphones, nothing like that. So during this period, you only have to fast, you only have to post your orders through post office to your broker. So it is impossible for you to post order of 5 minutes, 10 minutes, 15 minutes. This order could even take weeks before it gets to your broker, or days. So based on the advancement in technological devices, this made it possible for traders to trade on the intraday chart, which is a minute hourly chart. So kudos to the advancement in technology. Now, under which category or where can we categorize our 15 minutes and 1 hour chart for our chart? Remember, I told you major long-term trend are 12 months, intermediate are within 12 months, and the minor are 3 months. And the least time frame we have then, starting from the day chart to the weekly chart to the monthly chart and to annual chart. Now, anything lesser than the day, we can tag that as internal swings. So our grandfather doesn't make any references to this before he died, because during his time, it was, we always just say the analog time. So I have to coin this after a lot of research. I just have to put this on my own name: internal swings. Now, these internal swings are what goes on inside the daily activity. So right here we have swings lesser than days, right? So we talk about right here lesser. It has to be lesser than days, right? Now, as a trader, before you should trade, you need to understand trend duration. You can't do everything all alone with trend direction. You need to have a sound, in-depth understanding of trend direction in combination with trend duration. It's just like you're trying to drive a car that has an engine without a gear system. The car is not complete. Likewise, you have a gear system without a functioning engine, the car is not complete. Now, trend duration, trend direction, they have to work together in unity. Right? Now, let's wipe out everything right here. Before we dive in deeper into this concept of trading or trend analysis, I all believe you know what the functions of these tools right here on our chart is all about at the top of our screen. Most of you have been following me, you see I have from the most of my charts are always starting from the 3-month chart, because this represents each quarter of business calendar period. And in a year, you're gonna have we are gonna have 4 3 months. When I say 4 3 months, this is what I mean. As a trader, we are gonna have 3 months in 4 places to give us 1 year calendar period. By the time you add all these 3 months together, it gives us 12 months, and 12 months give us maybe 365, or this 366. No, we have leap year, am I right? 365 altogether. That is a year, right? Now, that is why you see right here, I only have my price chart starting from 3 months, because I always monitor quarter of the year, which is a business calendar period. We have first quarter, second quarter, third quarter, fourth quarter. So I want to see what is going on. Now that is it. We have the monthly chart, the weekly chart, and the day chart. Now all the intraday chart, 4 hour, 8 hour, all the way to the 1 sec. It's even crazy. Some traders go all the way down to seconds chart. That's crazy, right? All these 4 hour, 8 hours, all the way to 1 seconds are just internal swings. Internal, right? Good. Now once we know that, now let's get back to our whiteboard and bit more explanation. Now I want to reveal to you the secrets which I do called, most traders call it top-down analysis, right? But there's something I call it the duration plus rectangular frames or trends. Okay, let's just do the calculation right here. It's just a formula I developed myself, right? As a trader, you need to find a way to present information for you to be easily understandable, right? You have to present information in such a way you can easily process it, right? Now, most traders call it top-down analysis. Top-down analysis. But most traders still don't know how to use top-down analysis, even though the name sounds top-down analysis. But in this class today, I'm going to break it down. What brought about, or what is the concept, the full definition of top-down analysis. Most traders, when they hear top-down analysis, they say, oh, go to the highest time frame and then check what is going on. But most traders don't know how to use the time frames correctly, and this is why I coined the word trend plus rectangular frames. We all know the dimensions of rectangle. Okay, I have a tool right here to draw it. Let me just use my tool right here. Now this is rectangle, right? We did mathematics, all this mathematical geometry, all this stuff in our schools, right? Engineering and our basic mathematics. Now we have the rectangular has 4 sides: 1, 2, 3, 4, right? Good. Now I would like to label my rectangle from the top and then to the, you can start okay, let's start from 1, 2 and 3 and 4, right? Now based on this section right here, this is where we're going to start our analysis. Then we rotate it. I think this is anti-clockwise, right? This is anti-clockwise. Am I right? Starting from the left hand side, we rotate to the right hand side. Is what? Anti-clockwise. Are we right? I want answers in the class. Are we right?
Yes.
All right. Now if you start from the left, if you can decide to start it from the right. If you would like to start from the right, you can do 2, 3, 4. I think this will be clockwise, right? Good. Now the concept right here is starting from the highest time frame. Now before we use this rectangular box right here, before we use this concept of rectangular frames right here, first I want us to first see how we can combine our time frame to give us rectangle frames. Right now, let's wipe this out. As a trader, first there is something you need to know, which is called trading methodology. Now we talk about position trading, position trading, and we have swing trading, and we have day trading. No. We have day trading, and we have scalp trading. Right now, these are what we have. Now listen attentively, traders. Now we are diving deep into this section of top-down analysis, how you run your top analysis with the effectiveness of the rectangular frames. Right now, let's get back right here. As a trader, you start your time frame from the monthly chart. Although some traders prefer to start from the 1 month, personally I prefer to start from the 3 months, and I will tell you why I prefer to start from the 3 months. Based on the teachings of our grandfather Robert Skubaker, they treated the quarterly business calendar period so very important. Right now, our time is almost going up. Now we have the 3 months right here. Most traders prefer to start from monthly chart, so you can start yours from the monthly chart, but I'm going to show you why I prefer to start from the 3 months. Now let's say for instance I start from the 3-month chart, and then you prefer to start yours from the monthly chart. Right now we move all the way to next. It's going to be weekly chart, but I started mine from 3-month chart, so it's going to be what? It's going to be monthly chart. If you started yours from the monthly chart, it's going to be weekly chart. Right now, the next chart is going to be weekly chart if I started from the 3-month chart, right? And if you started yours from the monthly chart, your next chart is going to be what? Day chart. Now, if you started yours like mine from the 3-month chart, our next chart is going to be what? Day chart. And if you started yours as a position trader from the monthly chart, your next time frame is going to be what? 4 hour. I don't know if you guys understand this concept right here. What I did right here is based on the sequential or chronological arrangements. Sorry, I think I'm going to advance in all this grammar. Now, what I did right here is I'm trying to arrange these time frames serially, the way they occurred based on the longevity of their duration. Now, we start from these points right here. One right here, I'm talking about 3 months. After 3 months, the next time frame is month. Another month, the next time frame is week. And after week, the next time frame is day. Now imagine you started just from the monthly chart. Your first time frame from the top is monthly, and your next time frame is weekly, and your third time frame is day, and your 4-hour chart is, your fourth side of the rectangle is 4 hour. This is wrong. As a position trader will never use an intraday chart for entry. Now there is something we call entry time frame and instant entry time frame. Another name for the instant is aggressive entry time frame. Don't worry, this is an advanced section of technical analysis. This is for the advanced trader, but I just want you guys to understand this, that because majority of traders, they always have a losing trade, and when they complain, they always said I follow the trend. When it's going up, I buy. When it's coming down, I sell. And I told them there are a lot of more factors to be added, not just your up trend, down trend, rigid trend, buy higher low, sell low high. The market is more than that. Right now, if you should initiate your analysis from the monthly chart as a position trader, you could end up on the 4-hour chart only if you are not using the rectangular frames. There are some traders, they use the triangular frames. When you use the triangular frames, it means you start from the monthly chart all the way to the weekly chart, you end it on the day chart. But most time I have another pattern which I do call the inside triangular pattern. So the inside right here would be your 4-hour chart, right? So to me, this is not the best approach for position trading based on my own manner of trading or concept of trading. But something about trading is there's no general rule or universal rule, but I think you have to do things the way you find it easy for you. Right now, let's just wipe this out. Now back to the discussion right here. So the best way I would like to align my time frame is to start my position time frame from what? From the 3-month chart all the way to monthly, to weekly, to day, because a position trader we use the day chart as entry. As a position trader, if you aren't using the day chart as your entry, you are no more a position trader. Position trader, the least time frame is day chart. Now, the day chart is for the conservative entry, and the weekly chart is for the aggressive entry. After you spot confirmation on the weekly chart, the following week you get in instantly without waiting for retracement. That is what is called aggressive entry. On Monday morning, you take your trade. There are some traders, once they check their chart during the weekend, on Monday they do not care about any fundamental factors coming. They take their trade because they are position trader, because they're going to be positioning themselves for a long period of time, which will go to a month or even years. So why should you use 4-hour chart as a position trader? No. But some traders may start looking out for days for retracement. So the least time frame as a position trader is a day. Now, this is for position P. Now, when we come to the swing trader, we start from the monthly all the way to the weekly, all the way to the day, and all the way to the 4-hour chart. So the 4-hour chart is one of the best time frames of swing trader. So the 4-hour chart will be your conservative time frame, and the day will be your aggressive entry time frame for your swing trader. That's why you see most swing traders, they use the 4-hour entry. But swing trading sometimes can elapse into period of position concept. Now, when we talk about day traders, as the name implies, let's see, we have the weekly chart, the day chart, the 4-hour chart, and the day traders. For you to have a high winning rate, it's better you look out for your entry on the 1-hour chart, conservative. Aggressive, you can take the 4-hour entry, right? But remember, you close your trade before the day close comes to an end. Now, scalpers, they ignore the concept of our speculative chart. Now, I'm still going to show you what's speculative, all these time frames right here, or their meanings right here. Now, let's start from the, as a scalper, where would you start from? As a scalper, to have the best winning rate, start from the day chart all the way to what? 4-hour, all the way to 1 hour, and the best time frame for scalpers to have a high winning rate is 15-minute chart. You try to go below 15-minute chart, wow, you are making things difficult for yourself, life difficult. Now, in one of my videos, I told traders that the universal time frame for traders of any type of trading methodology is what we call the day chart. Now you can see that going through this rectangular arrangement of our time frame, you can see the day chart is parallel to one another right here, and it gives us the 4 digits. You can see that starting from low right here all the way up. The day chart is the universal time frame. Take that, or you don't believe it, that is your own decision. But the day chart is a universal time frame. Any type of trader or any trader you are, any concept, any trading strategy you want to use, you cannot ignore the day chart. It's a universal chart. And for you as a speculator, combining the weekly chart will help you to go a long way, help you to survive, have a high winning survival rate. Right now, when we say position swing, now as a position trader, you need to understand your key primary time frames to start your analysis will be the monthly chart, and as a swing trader, your monthly and the weekly chart. As a day trader, your weekly and day chart, and as a scalper, your day and 4-hour chart. And your entries, these are your entries, your entry as conservative. Now, how can you use this time frame for your entries? We see you have a long way to go, not just based on the images we drew right here. There are ways you can combine this thing, just like when you want to cook a delicious meals in your houses. You know, there's a way you have to combine all these things to make this meal to be delicious, right? So we have to arrange these factors so that they can obey one another, so that there can be uniformity, so that they can work together as a team. So these are classes are extracted from the advanced section of technical analysis. So I just want you guys to have this mindset, eyes opening concept right here, that buying, selling, it's more than higher lows and low highs, and no, it's more than that. You need to be able to define the strength of the trend you are buying. How strong is it? Is it a swing of the major trend, or a swing of the speculative trend, or a swing of the minor trend, or you are trading internal swings? Now, in summary, before we put an end to this class, now inside major trend we have intermediate trend, right? And inside intermediate trend we have minor trend, and inside minor trend we have internal swings. So you can see that. Now, before you take a trade, you need to be able to know what type of trend are you trading. Are you trading the baby of minor trends, or are you taking the baby of intermediate trend, or are you taking the baby of a major trend? You need to be able to define, to know the type of trend you are taking. So maybe in the future, maybe if you eventually are serious with the course and you eventually get to the advanced section of your program, if you don't end up or give up along the way or on your journey to becoming a trader, I know we are going to treat these classes on how to combine trends in the advanced section of our trading tutorial. All right, so do we have questions? Of course there are going to be a lot of questions, because I think this is going to be a very advanced section for most traders in this class today. All right, do we have questions? There are questions. I know there are going to be a lot of questions.
Hello, sir.
All right.
So my question is, when next are we having this kind of class again, sir?
You mean this topic?
Yes, like the continuation of this advanced class.
We are not yet to. I think that is Mrs. Adekunbi from United Kingdom, right?
Yes, sir.
You are not yet up to this stage. It's just an eyes opener for majority of the traders, that there are a lot of factors which goes into trading. It's not just about uptrend, downtrend, you buy, you sell. There are a lot of factors you have to combine. But for now, just follow the beginner stage. And that is why we said you are still going to be under our radar, so that we guide you. And that was the reason why we said don't take a trade until when you will give you the permission. And when it's time for you to take your trade, you have to work under our rules and guidance. So we take a trade in the community, in the group, we share with you. You take note of the winning trade and the losing trade. So as time goes on, you keep on accumulating more knowledge on this concept. So for now, it's just like a student staying in the level 2 and then trying to go to level 12. But this is just for you to know that there are a lot more that goes into trading. It is not just about the uptrend and downtrend in trading, right?
Okay, sir. Because
right.
This class is like, it's like my head is going to burst. Right
of course, I know. It's understandable. All right. So do you have? You are welcome. Do you have any? Do you have questions? We have questions again from any student in the class. Ms. Falake, thank you for joining us for the first time. Peter George, Mustodik, we see our 4 others. Thank you for joining. So do you have questions in the class? Mr. Abatunde, thank you. Kingdom Project, thank you. Olaraju, thank you. Olawale Adisa, thank you. Kazim, thank you. Thank you. Thank you. Mr. Akpo, thank you. Thank you so much, everyone. So, guys, this will be the end of our class today. So, is it Happy New Year in advance? I'll see you next year, right? So you take care of yourself, manage your risk, and keep learning. Right? Thank you so much. I'll see you in the next one. Peace.